Nariman Behravesh is the chief economist at IHS Global Insight. He joins me now from Lexington, Massachusetts. Nariman, good to talk with you again.
Thank you, Betty.
And you have said that the big question is what happens when the Fed, I mean, we're not just talking about all the programs, but specifically when the Fed exits the mortgage buying program, right?
That's correct. And I think the issue here is as it stops buying, and it's not going to be selling these things, but as it stops buying, then could that result in a spike in mortgage rates? If that happens, we're pretty convinced that the Fed will step back in again. The last thing it wants to do right now is upset the housing market, which is extremely fragile. The housing recovery seems to be kind of sputtering out a little bit. Doesn't want to do anything to jeopardize that recovery in any way. So I think in terms of today's testimony, Mr. Bernanke is going to try to give himself lots of room to maneuver, lots of room to reverse course if he needs to, especially on the mortgage-backed securities program.
Right. But if he does that, if he tries to leave the door open for that, doesn't that damage the credibility of the Fed?
Well, it might, as long as they've got a plan, but they say, look, you know, we're very cognizant of the fragility of the recovery, so we're not going to be doctrinaire about this. We're going to be flexible, but we do have a plan, and it's a long-term sort of plan. My guess is the markets will react to that fairly well.
But is there more to lose, though, if the Fed just simply says, you know what, we think the housing market may be a bit too fragile for us to exit? I mean, could there be anything lost from that?
Well, that's a good question. I think, you know, again, they're going to sort of couch the language in a way to say, you know, we're committed to this, but on the other hand, we just have to be careful about the housing market, and we don't want to do anything to jeopardize the recovery. Again, I don't think anybody's going to balk at that.
Right. Okay, well, Nariman, you know, we've been talking to some economists, some of whom are critical about what the Fed has done. One line of criticism has been that the emergency programs that have been put in place have compromised the independence of the Fed. Where do you stand on that?
Well, again, it's between two very tough choices. It was that, or in effect, you know, sort of let the U.S. financial system not go, but incur more damage. I think in the end, excuse me, in the end they balanced it out fairly well. They may have compromised their independence a little bit, but we've come through this in reasonably good shape, one has to say. So there were no easy choices here, and I think in the end they probably made the better of two bad choices.
The better of two bad choices, but have they also left themselves a bit more vulnerable to how the private market works when they exit?
Well, I think you're right about that. And that, you know, that is the big uncertainty, if you will, going forward about what happens. And here they're going to have to move very cautiously. I think they need to signal that commitment to being out of that market, let's say within 3 years or whatever the time horizon is. But again, understanding that they'll have to move cautiously, allowing the private markets to kind of come back in a way that they haven't been, of course.
Right, exactly. It's certainly a delicate balance for Bernanke and the Fed chiefs. Nariman, good to talk with you as always. Thanks for joining us. Nariman Behravesh, chief economist at IHS Global Insight.